What's up, guys? I'm nobody special. I saw a video on Squawk on the Street today. Jim Cramer and company finally starting to get their head around the fact that this inflation problem is actually real, that it's not transitory, that the supply chain issues are affecting everybody. And even these guys who don't do their own shopping, rarely get out, they're starting to feel it too. And they touched on a lot of subjects in this video that I wanted to go through and unpack it with you guys a little bit. Before I do that, if you don't mind, could you please smash that big, beautiful like button? It would really help me out. Subscribe to my channel. Hit that notification bell. It helps this channel to keep growing, and I would be forever in your debt. Now, that said, let's take a look at this video. We are going to shrink my big, fat melon of a head. Let's get me out of the way. We'll go down in the corner here, and let's get into the video.
Local infrastructure stocks have just been horrendous. And they are a great tell, Carl, for where this bill is. Manchin and Caterpillar.
This is a separate bill from infrastructure, which
no, but I'm saying nothing.
Waiting. Right.
Everything's stalled.
Yeah.
Everything.
So what they're talking about here is the $3.5 trillion human infrastructure, whatever package, along with the $1 trillion bipartisan infrastructure package. I know it's so hard to keep track of these trillions. I know I left a trillion around here somewhere. But basically, the gridlock in Washington seems to be getting worse, if you can believe that. Again, we don't do politics here on this channel. I don't touch that with a 10-foot pole. But what they're mentioning here, real quick, Senator Joe Manchin, who is one of the more centrist Democrats, is opposed to the big bill right now, and that has kind of stalled this big $3.5 trillion plan, which... We're not going to get into the politics of it, but I'll just say something that big hitting the bond market because the government would have to borrow it from somebody, that would actually send some major ripples through the bond market if a bill like that were to pass and all of a sudden all that borrowing, that money comes from somewhere, and supposedly the Fed is not going to print it all. So that would really drive up interest rates, right? I mean, think about borrowing the supply and demand of money. If the supply is supposed to stop growing and then we have demand for another $3.5 trillion, that drives up the price of money. The price of money is interest rates. All right, so that $3.5 trillion infrastructure plan could have sent yields on the 10-year running hot, which would have had some real negative consequences for the rest of the economy as it drives up borrowing costs. So we'll just mention that. I don't want to spend too much time on the infrastructure. Let's move on.
Installed. Making it so that I know Costin's right. But the problem with it is that if there's no urgency, how do we make a judgment that it's going to impact 2021 numbers? I mean, it's hard to.
There's the added layer of, say you got an infrastructure bill. Where would the raw materials come from? This Goldman note warning about commodity prices and ongoing scarcity. They're talking about oil going back to 80.
Right.
All right, so they're talking about commodities here. Now, remember, commodities had a heck of a run in the first half of this year. They were led by lumber prices. Lumber prices turned south and crashed all the way down below where they started the year at, which really surprised me. Not that they crashed, but how far they crashed. But a lot of the commodities have not been doing so well in the third quarter, in the second half of the year. So this note from Goldman is warning that the commodities are going to turn soon. And you can kind of see that, we're looking right here at crude oil prices. This is, let's look at a one-year chart. You see, here's the beginning of the year in oil. Let's make sure you can see, had a great first half of the year, a little bit of a pullback, and then we're on the way up here. I did a video about oil not too long ago that I had taken out some positions in USO, some call options in USO. I'm still in that position, although I will probably be taking some profits soon. I don't know. But the big wild card in oil, this is a 1-month chart now. The big wild card is geopolitical risk. We have not heard the last of the Iranians in the Strait of Hormuz. We have not heard the last from OPEC. Russia is a major player in the oil market. So there is a real geopolitical mess going on surrounding oil prices. And on top of that, we've got storm damage in the Gulf, and that's hit domestic production. So I think we're going to hear more on the oil market in the not-too-distant future. But let's move on with the video.
Aluminums, yep. gas.
By the way, you guys seen uranium? I know that's a little offbeat. Well, you see what's going on with uranium?
Actually, no, I'm not that
It's
close
out
to
of control. It's gone up enormously, yes, because of potentially recommissioning. Nuclear power is clean.
They won't.
So if you're following my channel, chances are you've already been following the uranium story. Not because I have. I have not covered uranium at all this year. But I know a lot of the channels that a lot of my subscribers also follow have covered uranium, and uranium has had a monster year. Let's bring up that chart of uranium. This is URA, Global Uranium ETF, and just look at this thing has gone parabolic. Let's make sure you can see here. Let's move my big fat melon of a head. And you can see uranium has just gone parabolic this year. Having a fantastic year down. This is, again, the ETF. Started around 24, and now we're up around 27. And again, if we zoom out a little bit, let's look at a 5-year chart. Again, just a monster run these last couple of days here. So the big thing with uranium, my personal opinion on what's driving it the most has been this rollout of the Sprott physical uranium ETF, because Sprott has virtually overnight just become a monster player in the uranium space. I don't know how much uranium he's bought. I say he, I'm talking about the trust. I don't know how much uranium Sprott has bought, but I know it is a not insignificant amount, and I know that the utilities and the uranium buyers are worried about that because it's affecting fuel prices. Now, uranium is if you don't know, it's the main fuel for nuclear power plants. Interestingly enough, I want to show you a trend in uranium prices. Where did I have that trend up? Here we go. This is an article in Seeking Alpha, but here we've got uranium prices on the spot market and the long-term market in this chart. And there's something I want to point out. In 2013, you notice that long-term market virtually fell off a cliff. In 2013 was when the megatons to megawatts program expired. And that was an agreement that we had with the Russians, where we used to take decommissioned Soviet nuclear warheads and we would downblend the highly enriched uranium that was in them, and we would make reactor fuel. Now, if you don't know, the fuel that we use in our nuclear reactors is usually about 2% enriched uranium. Now, when you hear enriched, there's uranium-235 is the fissile uranium. That's what actually splits, creating the heat. But then there's uranium-238, which is not really fissile. It can become plutonium and then split that way. But for the most part, when you hear about the enrichment of uranium, it's how much uranium-235 is in the mix. And natural uranium out of the ground is about 0.7% 235. So it comes out of the ground at about 0.7%. For nuclear weapons, they enrich it to like 90% or some ridiculously highly enriched amount. Well, they dilute it, they downblend it down, and they make it into about 2% enriched. And that's when it becomes reactor fuel. Well, in 2013, this program we had where we were powering our cities with the same nuclear warheads that were built to destroy them, that was a really powerful story, I thought. But that program expired in 2013. And the United States used to get half of its uranium from this megatons to megawatts program. Half of our commercial nuclear fuel supply was supplied by these decommissioned Russian warheads. Not anymore. And it took a couple of years for that to really have any impact in the availability of uranium, but we're starting to see it now that the mines are not keeping up with the demand for uranium, and it's starting to cause prices to rise. Now, that's also been partially offset by the fracking boom in the United States, and a lot of U.S., we lost a lot of reactors in the last 10 years in this country. They've been shut down because nuclear power was not as economical as it once was. It hit me close to home. I don't know if you know, but that's my day job. I'm an engineer. I work in nuclear power. But the low cost of natural gas due to the fracking boom caused a lot of coal and nuclear generation in this country to shut down and be replaced by natural gas. Well, now natural gas prices are starting to rise again. Actually, natural gas prices are starting to rise quite a bit, and that is also bullish for uranium prices. because the higher the natural gas costs, the more economically viable American nuclear power plants are. So that's something to keep in mind. Let's get back to this video, though.
Climate change and coming around, but yes, uranium has moved up dramatically.
I went to buy a bicycle this weekend. I went in. Have you seen this? I went to see a Trex bike. I figured that maybe 600, 700. It was 4,000.
I went to PC Richard to buy a speaker, and we were just chatting with the dude. He's like, you want a new Sub-Zero ice maker? July. If you're renovating your kitchen and
July.
you want to, yeah, July.
No, July already happened.
Yeah.
I mean, July.
The next one.
July.
Wait for the next one.
And meanwhile, my coffee guy says his costs have gone up 30% also.
All right. So there it is. I mean, there's your inflation story. I'm sorry, I had my big fat melon in the way again. But what they're lamenting the problems here. You just can't get anything. Stuff is hard to come by. Stuff is going up. He mentioned coffee prices. Coffee prices were affected by a deep freeze in Brazil it's going to impact coffee prices for years. Now the event in Brazil, that's kind of a one-off. But what they're talking about here, bicycles, glass, Sub-Zero refrigerators, all this stuff becoming harder to get. Folks, this is inflation. This is what's causing this. All this money that they printed and they gave to people. And they told people for a year, you don't need to pay your rent, you don't need to pay your mortgage because they're never going to take your house or they're never going to kick you out. So people spent their rent money on stuff, and people took their stimmies and they spent it on stuff. Folks, it's having real world consequences. You can't get stuff anymore. And, I like to look at this marine traffic. Let's get my head out of the way here. We'll go down into this corner now. This is the ports of Long Beach and Los Angeles. Look at how many, all these green and red dots here. They're just boats sitting there, loaded ships. And I counted close to 50 boats here in Los Angeles and Long Beach, just sitting there waited. I mean, these things are stacked to the top of these 40-foot cargo containers, and they're just full of things that have come over from Asia. And it's gotten so bad at the ports of Long Beach and LA that now if you look over here, down in Georgia, now we've got like 25, almost 30 ships in Atlanta, Georgia are just sitting there waiting to unload. So the problem is now spread to the East Coast as, the situation on the West Coast is so backed up that some of these ships are diverting now to send their stuff through to the East Coast. Well, now the East Coast is all backed up. Where are they going to go next? The Gulf? I don't know. That's the bike that Kramer was talking about and the Sub-Zero refrigerator that the other guy was talking about. That's what they're sitting on boats waiting to get offloaded. That's why you can't get anything. And, we're now into the peak shipping season because all the stores are buying their stuff for Christmas now. They've placed their orders and they're bringing in their holiday inventory now. So this problem's going to get a lot worse for the next couple of months. And I'm even seeing some articles that say this problem could persist for 2 or 3 years even. Prices have to rise, folks. I mean, if you have this much of a bottleneck at the ports, the solution to shortages is higher prices. That's basic economics. We've got more price hikes on the horizon. I don't like to see it, but that's what's coming.
We all know it. That's the thing that is so difficult.
It's like, I don't know.
We all know it. Why is the market
prices
down? Well, the market has been going down of late.
A little
I mean,
bit.
I've had a bathroom that's now since February. Started February. And it's nowhere. It's nowhere near glass. Forget it. I mean, you're begging Kohler, private company. There's nothing.
It's interesting. He's talking about having a bathroom done because I know the home builders are really struggling. Not so much with lumber anymore. The lumber issue has gone away, but now it's things like bathroom fixtures, lighting fixtures, windows. All the other parts of a house are now causing bottlenecks. And the reason I'm drawing attention to this is because when Powell went off and did his transitory comment, which my favorite thing is crack a beer and take a sip every time Powell says transitory. It makes for some interesting commentary. But we had shortages in lumber that were causing difficulties, and they said, okay, we have this isolated instance of lumber, and once that problem is resolved, the inflation is going to go away. Well, the lumber situation was resolved, but now we're having problems elsewhere with the fixtures, with the glass, with the windows, with the appliances. And then we've also had this thing with used car prices because of the chips, and now they're saying, okay, well, that could persist for 2 or 3 years. So they're sitting there. They blame the inflation on these isolated pockets of the economy, saying this is what's causing the inflation. My point has always been it's the inflation that is causing the shortages in these isolated pockets of the economy. One of the reasons why we have a shortage of chips is because so many people went off and bought Bitcoin miners because they saw the currency becoming worthless and these new NVIDIA cards were so great. And so people are like, I'm getting out of my dollars. Like crypto is going to go up because the dollar is going to go down. So the chip shortage was in part created by this inflationary problem. And then all that stuff that was on those boats that I was showing you, backed up in these shipping containers. I mean, there's chips these days. Everything has a chip in it, not just cars, coffee makers, cell phone, everything, thermostats. It's all got chips in it. So the chip shortage is not causing inflation. Inflation is causing the chip shortage. That's my point. And the same thing with Jim Cramer's bathroom situation here. All right. This is the direct result of money printing. All right. The economy is the natural ecosystem and the natural way that money and goods and services trades hands. And when you just dump huge amounts of currency into that closed loop system, you cause problems. And we're going to be living with the mayhem caused by this money printing for years. Let's move me again and resume the video.
I mean, you can't get a job done.
So when is this all going to work its way through?
Into the stock market?
No. When are all these supply chain disruptions going to start to melt away, so to speak? Well, when does this
I think
start
when the
to...
ice...
I want to rewind this a little bit. I want you to look at Jim Cramer's face when he says, when are these supply chain problems going to melt away? Look at the baffled look on Cramer's face.
its way through
Into the stock market?
No. When are all these supply chain disruptions going to start to melt away, so to speak? Well, when
You see Jim look down at his lap there? He's got no idea. Look
to
again.
melt away, so to speak? Well, when does this
I think
start
when the
to
ice
moderate?
maker melts away. I think
And the reason why I played that a couple of times is these problems are not going anywhere anytime soon. All right, get used to this. It's going to get a lot worse before it gets better. The inflation is going to get higher. I talked about in some other videos about how the situation in the housing market hasn't even shown up in the inflation numbers yet. This massive run over the last year, the biggest rally in real estate since before the global financial crisis, it has not even showed up in the inflation numbers yet. It should start very soon because it was about a year ago that this run in real estate started. So maybe we even see it later this week. But we've got much higher inflation numbers coming. We've got every day there's more and more boats sitting up the wait. So the supply shortages are going to get worse. The price hikes, I mean, the only way you solve shortages is rationing or price hikes. And I don't know, I wouldn't put it past the government to start rationing things, but right now, price hikes are coming. All right, the price of everything is going to keep going up, and that's that dumbfounded look in Jim Cramer's face when he says, oh, "I don't know when these problems are going to go away," because they're not going away anytime soon. Nobody knows how bad it's going to get.
I think that we're all kind of sitting here thinking, well, if you had bought the speaker, what would it be? If I buy the bike, I try to buy a carbon steel rather than aluminum, but carbon steel's up more than aluminum. I mean, the raw cost of everything, including your coffee guy, which may be the ultimate kind of lipstick indicator.
Yeah.
Now, how his margins must be horrible.
Horrible. Well, also because foot traffic here in this area is down.
But who can handle it? You know, who handles it?
Not easy for a
Starbucks.
small-
Now he just made a point there. I want to rewind that again about foot traffic.
Who can handle it? You know, who handles
Oh, I got to rewind a little more.
must be horrible.
Horrible. Well, also because foot traffic here in this area is down.
But who can handle it? You know, who handles it?
Not easy for a
Starbucks
small
locked in.
businessman.
Foot traffic is down dramatically. All right. Have you been to a mall lately? Has anyone been to a mall lately? If you answered no, it doesn't surprise me because nobody goes to malls anymore. If I go to a mall, it's because I'm there to see how many people aren't at the mall. All right. And I talked about this in my last video. Even despite the buying of everything is at all-time highs as evidenced by the ships and the trucks and everything else, right? We've talked about that. The buying of stuff is at an all-time high, and yet there's nobody in the stores. The malls are empty. The lights are on. The fountains are running. The music is playing, but there's nobody shopping. And that's what he was just talking about there with the foot traffic is down. and how hard it is for small business owners. I can't imagine being a small business owner right now. But the point is, folks, what he's touching on here is commercial real estate. Okay? If we have a major credit crisis in the U.S., it's not going to be caused by residential real estate. All right? Residential real estate right now, you've got a shortage of supply. One of the reasons why prices keep going up and up and up and up, there's not enough houses for sale, and the home builders can't build them fast enough to keep up with demand. Okay, so that's real price action. It's not this speculative bubble, right? It's not second, third homes being bought like it is in China. But the commercial mortgage-backed securities, the commercial real estate, the malls, the strip malls, the mini malls, the brick and mortar buildings, how are these values where they're at? How are they not in the toilet? What is supporting the price? What is paying to keep the fountains running in the mall and the lights on and the music playing? Something is wrong there. Something is very wrong in commercial real estate. And Economic Ninja has talked about this. There's been a story for a couple of years about how the ratings agencies are asleep at the wheel again, and that these CMBSs, commercial mortgage-backed securities, which are basically commercial real estate, is fake, that the market is propped up, that there's fraud going on. I found out last week, I was incensed when I found out that it was either Kaplan or Rosengren, one of the Fed presidents, had been investing in commercial REITs. Give me a break, man. You're pumping billions of dollars into a market that you're personally invested in, and then the guy's patting himself on the back for being so ethical, for dumping his stocks right before he cuts off the flow of money. But the next big crisis in this country, the next contagion risk, if it doesn't come from China and the real estate in China that I talked about a few days ago in my video, it'll be commercial real estate in the United States. That sends everything down next time. Let's continue.
That's why Starbucks 119 going to 125. I think.
The story on Reuters this morning, the headline is "From Zippers to Glass, Shortages of Basic Goods Hobble U.S. Economy." But your general view has been, at least on, say, oil, that demand destruction will keep it in check to some degree.
Well, this is where the Saudis have a price that they don't want it to go to 80. The one that we have to talk about, we're going to be talking about all winter, is that natural gas is finally, because we're such an export power and because there's a mismatch with pipelines. David, natural gas is going to end up being the cost for consumers.
You made that point last week.
That's a big point here, because the U.S. is more natural gas dependent than we've ever been. I talked about how a lot of commercial nuclear power plants had shut down in the last 10 years and how a lot of coal had shut down over the last 10 years because of the fracking boom and all of this cheap natural gas. There's been a lot of natural gas power plants built in the U.S. However, now with the disruption that's going on in the Gulf because of the hurricane, with all of the exports, the United States exports a huge amount of natural gas now. We'll talk about that in a minute. On top of the fact that, again, we don't do politics, but the Biden administration has begun cracking down on natural gas production on the mainland by eliminating fracking leases and cutting off pipelines. Now we're starting to see the price of natural gas rise. Well, an increase in the price of natural gas will have twice as much of an impact on the U.S. economy as it would have had 10 years ago, because now we've got so much more natural gas generation. And one of the big problems that we saw with this power outage in Texas over the winter, one of the reasons it was so destructive is because Texas has gone very heavily natural gas for its power grid. Well, when it's cold, when it gets super cold in the United States, the natural gas gets prioritized for heating homes because we use it for generating electric and we also use it for heating homes. And we prioritize home heating over power generation in the wintertime. Now, we have all the natural gas reserves in the world, but we only have so much pipeline capacity. And there's only so much gas you can flow through a pipe this big. Doesn't matter how much gas you have and how much you need. A pipe this big is only going to hold that much. It's only going to flow that much gas. And we're at the point now where we are a winter peaking power grid. What I mean by peak, we used to peak in the summertime. Like the highest cost electricity used to come in the summertime when everybody had their air conditioners cranked up. That's when the power grid could barely sustain us. But we've built so much natural gas generation that now the power prices don't really peak in the summertime like they used to. We've got all the generation capacity that we need with all these new natural gas plants. But in the wintertime, the pipelines can only handle so much flow. And when everybody's got their heat cranked up and we need electricity, the pipelines can't handle it. And the natural gas plants go down. And the only other thing we've built are windmills, which freeze solid and don't generate any power in the winter, and solar panels, which don't generate any power when they're covered in snow. We've shut down our coal and our nuclear, which is our only other baseload power, and that's when we have these awful power outages in the wintertime like we had in Texas. And the reason I'm pointing that out is because he's talking about some winter demand here and how we've got some tough utility bills ahead of us. Besides the inflation situation, with what's going on in natural gas right now, with how we are more thirsty for natural gas than we've ever been, and how we're started to scale back our domestic production at the same time we're exporting more than we've ever exported, we're going to have some real problems in the power grid this winter. And if we get one of those major cold spells where a chunk of the polar vortex breaks off and makes its way down south into the Great Lakes or even as far as Texas like last year, then we could have some major problems this winter. Keep that in mind.
Gone mad, I know, as well.
I'm not going away on that one. I got a couple of guys talking about how we've exported our way into hell.
All right, that was the last point that he made there was we exported our way into hell. And what he's talking about there is the exportation of liquefied natural gas, or LNG. And real quick, I want to talk about it because I have been holding LNG stock, Schneider Energy. I can't take credit for having any foresight here. I bought this a long time ago. I didn't buy it this year expecting natural gas prices to run up. But because Kramer mentioned that thing about exporting our way into hell, I wanted to talk about it real quick because Schneider Energy, again, let me preface, I am not a financial advisor. Do not touch a trade based on what you hear from me. I want you to do your own research and your own DD and arrive at a decision that's right for you based on your unique situation. Okay, so here's LNG, Schneider Energy. This is one that I own. Full disclosure, I've owned this for a long time, but you can see it's had a heck of a run as natural gas prices have begun to climb. What Schneider does is they buy natural gas here in the States in gaseous form. They buy it through the pipelines. They chill it. They use, I don't know if it's liquid nitrogen or whatever, but they call it liquefaction, where they liquefy the natural gas. They condense it way, way down to the point where it's super cold, and now it's a liquid, and they load it on the tankers, and they sell it to Europe or Asia. And even though natural gas prices in the U.S. are going up right now, so that makes their input costs more expensive, natural gas prices in Europe are going up much, much faster. Now, the Nord Stream pipeline, which is this Russian pipeline that allows them to circumnavigate the Ukraine so they can shut off the flow of gas to Ukraine and still sell natural gas to Western Europe, that pipeline is a threat to this company. I just want to throw that out there because it gives Europe the option to buy their gas from a pipeline, through a pipeline from the Russians, which would be cheaper than Schneider's liquefied natural gas. So that's out there. But in the short term, with prices doing what they're going to do in Europe, I think this one is a safe bet for a while. And another thing I want to mention is that LNG is a pretty solid inflation hedge. And the reason I mention that is because they've been building these liquefaction trains for about the last 10 years. I mean, actually, Schneider started as a regasification enterprise. They were going to buy LNG from other countries and then regasify it. And that was right before the fracking boom. And they did a 180 when the fracking boom hit, and they went from importing LNG to exporting LNG. They spent billions over the last 10 years to build these massive facilities. It was the largest construction project in the U.S. for the last decade. But now they are a cash flow machine. They are generating billions in revenue. And this is a commodity that they can sell at inflation-adjusted prices. All right. So as a hedge against inflation, this can be viewed as a commodity play. The other reason this is a good inflation play is because they are so heavily indebted that as inflation continues to get worse, they've been able to refinance a lot of their debt at low interest rates. And now you've got inflation whittling down the value of their debt while increasing the value of their product, the LNG that they produce. So this is a pretty good inflation play. Again, I can't tell you like I bought this a month ago anticipating this run in natural gas. I didn't. I've owned this one for years. But I'll also point out that they just started paying a dividend. It's not a big one, but they have definitely transitioned from a borrower builder into a producer and a payer. So keep your eye on this one for the foreseeable future. Anyways, guys, that's all I got from today. So in a nutshell, I think CNBC is really starting to get wind of just how bad economically these shortages and this inflation problem is starting to cause pain in all these unanticipated corners of the economy. And the fact that they're starting to talk about this on the air is big, because CNBC has for years just been towing the transitory party line. Take whatever Powell says and says, oh no, it's by the end of the summer, we think inflation will be back down to manageable levels. Inflation is getting worse for the foreseeable future. It's going to get a lot worse because of this real estate and because of owner's equivalent rent, and how it's going to start driving up the lodging and the rent factors in the inflation calculations. And barring some massive deflationary credit collapse, which we could get out of China or we could get out of commercial mortgage-backed securities, keep an eye on those two things. But barring some black swan credit crisis event, inflation is going to keep getting worse, and all these things that they're talking about are going to get a lot worse for us. Anyways, guys, I want to thank you for your time. Thank you for watching this video. I hope you enjoyed it. If you did, please give me a thumbs up, smash that like button, subscribe to my channel, hit that notification bell. It would help me to keep growing this channel, and it would really help me out. I'd be forever in your debt. Until next time, live small and dream big.